Okay, I'm going to show you guys how I get my bias for the week. My bias for each day. It's a common question and it can be quite tough for newer traders, especially to grasp how to determine the higher time frame bias. So I'll break it down for you here, nice and simple, and this is specific to ICT traders, okay? So if you don't trade ICT, this probably won't make much sense to you, but if you do trade ICT concepts, this is exactly the video you're looking for, okay? So this is how I do it. I'll basically run you through me marking up my bias for the week, for this coming week. Today is Monday, one trading day has already elapsed, but I'll show you how I determine my bias for this week, okay? Now, before we get into it, I just want to get you to note these points here, all right? So price is drawn to one of two things only, okay? It's either inefficiencies, so fair value gaps, volume imbalances, any form of gap or inefficiency. You guys who trade ICT, you're familiar with what inefficiencies are, okay? So price is drawn to inefficiencies first, or secondly, liquidity points. So equal lows, equal highs, even relevant, important swing highs and swing lows are counted as liquidity points, all right? So first you're looking for inefficiencies, and then you're looking for liquidity. Now, for framing my bias, I like to start every single week. I start at the weekly level, okay? So I start here on the weekly chart, and we'll run through that in a second. Then I drop down to the daily chart, and lastly, the 4-hour chart. All right, and the 4-hour chart is more used for my intraday draws on liquidity, but we'll get to that in a second too. Now, a note here, this is what used to annoy me as a newer trader, is that I was like thinking, you can determine your bias, but what if your bias for the week is wrong? Now, that's just the reality of things, okay? You're never going to get this 100% correct. You can have all the right inefficiencies and liquidity points marked out, but sometimes the market will just want to run straight through everything, and that's just what it is, all right? So you're not always going to get this 100% correct. What we're doing is thinking in terms of probabilities. Probabilities as in what is the market most likely to draw towards this week or today. So that's trading in general, all right? It's a game of probabilities. You're never going to have this 100%. So just keep that in mind going forwards. Okay, say goodbye to that text box. It's gone. Now let's mark out, starting on the weekly chart. This is how I do it at the start of every week. So ideally on a Sunday, I come in here, and what I'm first looking for is, what do we say? First, I'm looking for inefficiencies. So what I'm doing is I'm looking at price now. I'm looking, first of all, where is price reaching to on the weekly chart? Obviously, you can see over the last, since March, really, we've just been having a decent bull run, okay, on the weekly chart. So where are we drawing to? If we look left, we've taken out the buy side liquidity here. That's been taken out. What's next is now we've traded into here. So I'll show you this. This is a weekly volume imbalance in here, okay? So from body low to body high, that is a bearish weekly volume imbalance. We've traded through that, but it's good to have this marked out, because what happens when you trade through imbalances, they are often used as support on the other side. So that's one thing I have marked out. Keep that in mind, all right? And secondly, we have a bearish fair value gap on the weekly chart as well. So fair value gap here, marked from this candle's low here. See, it's created a big gap which overlaps with the volume imbalance. Mark it down to the candle's high. Boom, see that? So those two overlap. So we're currently in a bearish point of interest, okay? And what we're wanting to do here is just see how price reacts within this zone this week. So for this week in particular, my bias is, it's one of two things. Either I'm waiting for price to react to these zones and break down to the downside, or I'm wanting to see if it disrespects the 50% level of both of these zones and uses the other side as support, okay? So we're watching and waiting for that. So that's what I'm looking for on the weekly chart. Those are the most nearest to price weekly inefficiencies there, okay? And if you're also looking at the current price leg that we're in, I also like to have this here marked out. So we have a weekly fair value gap at the low end of those bearish gaps. So it's a weekly bullish fair value gap in here. So I like to have that marked out in green, just for my reference, okay? And what I do as well is I like to annotate these. So weekly fair value gap plus. And I won't do it for the other two, you get the idea. It'll take too long if I had to mark these all out. So I mark them all out like that. Weekly fair value gap plus. And what else do we have as well? In here we have a weekly order block as well. I put a line delineating that. So an order block can also be counted as a PD array, inefficiency, whatever you want to call that. So weekly order block plus. All right, so those are my points of interest on the weekly chart. So here I can kind of determine, okay, we're in a weekly bearish imbalance, fair value gap and volume imbalance. We could expect a bit of a reaction. If it doesn't cause an entire market structure shift back to the downside, at least it might cause a retracement back into these discount arrays. So we got weekly fair value gap, a bullish weekly fair value gap, and a bullish weekly order block. So I'm half expecting price to make some sort of retracement this week and touch into these. All right. Now, from this point, that's my weekly chart marked out. This is the most close to current price zones of interest. And in fact, if we were to continue past these zones here, then I'd start looking at this swing high from Monday, the 28th of March. I'll mark that out as well. That can be a point of liquidity. So I'll write out weekly liquidity. All right. So that's all marked out. That's the weekly chart done. Cool. Once we've done that, I drop down to the daily chart. All right. So now that we're on the daily chart, you can see price has almost reached the top of both of these imbalances. So we have the volume imbalance and the weekly fair value gap. Price has reached right up into those. It hasn't really reacted to it yet, okay? We've just disrespected the 50% level. It kind of stopped here on the 14th of July, but it ended up just pushing through. So we could mean that this is going to be looking at higher prices for the week, okay? So it might be that we don't even retrace back to this zone. So this is what I mean by you start from the top down on the weekly chart. It looks like we're in these imbalances now. But if you drop down to the daily chart, price has actually totally disrespected those imbalances. So we can see price came back down almost to the 50% level. And today we had a bullish day, up close. So we can probably expect another up close day tomorrow, pushing past the swing high and potentially reaching into that point of liquidity, weekly liquidity. All right. So from here on the daily chart, all I'm looking for is more imbalances and inefficiencies. So if we don't push past this high here tomorrow and we start to break down a little bit, then I would expect price to tap into this weekly fair value gap, weekly order block. And what I'm looking for now on the daily chart is I'm looking for PD arrays that are nested within the weekly levels. So we're in this weekly fair value gap. We have a daily fair value gap here. We have a daily fair value gap here. And a daily fair value gap here. Okay. So there's 3 daily fair value gaps nested within both the weekly fair value gap and the weekly order block, bullish order block, okay? And not only is that a weekly bullish order block, but if you mark the top of that candle, that is now a daily bullish order block as well, okay? So do you see what I'm doing here, guys? I'm going through from the weekly down to the daily and seeing what PD arrays are nested within the weekly PD arrays, okay? And these are high probability zones, probably going to be a strong draw on liquidity, all right? So at some point soon, if price doesn't break above the weekly volume imbalance and fair value gap, if it doesn't break past that's the high of the imbalances here, then I'm expecting price to draw into these discount zones here before continuing upwards, okay? Does that make sense? So basically, I can't see right now what the movement of price is going to be. I'm waiting to look for a reaction. Typically Monday, Tuesday, you can think of the start of the week like this. For those of you familiar with the power of 3, open, high, low, close, what happens at the open of a candle? Well, it leaves a wick. And if you're expecting bearish prices, you can expect a wick or manipulation to the upside before pulling back down to the weekly open and then coming down to the close and forming a low. So what I'm expecting is if we're going to be bearish on the week, yes, we can expect higher prices for Monday, Tuesday. And then after that, we can expect price to drop down into these discount zones here. Okay, so this in my head for myself, I'm looking at potentially bearish prices this week. Okay, so I want to see how Tuesday closes. If Tuesday closes above the swing high, then I'll probably be expecting the liquidity to be tapped into, the weekly liquidity above. However, if tomorrow we have a bearish day and we close closer to the open of yesterday, then I'm going to be expecting price to draw down into these discount zones on the weekly and daily chart, okay? So in a sense, you are reacting to price, okay? You're not always going to get this right, but Monday, Tuesday, I like to use those days to kind of gauge which direction we're going in. So I've got my draws on liquidity here. I've got my inefficiencies, got my liquidity points marked out, and I'm waiting for Monday and Tuesday to tip its hand to me to show me the direction of the week, the likely direction of the expansion of the week, okay? So that's how I get my bias. And once I've got these zones marked out, what I'm doing intraday, so say during tomorrow's trading session, I'll then drop down to the 4-hourly chart, and I'm trying to look for what are we looking at here. So if we're bearish, we could be looking at a reaction to the volume imbalance in here. Okay, could be looking at a bearish reaction to that. Does that make sense? So I'm looking for, on the 4-hourly chart, PD arrays nested within these larger weekly and daily arrays. That's for points of interest, points of reaction in the intraday term. All right, so I'm looking at the 4-hourly chart to see what we have nested within these larger PD arrays. All right, and that's the key. If you see a PD array, a larger PD array on the weekly or daily chart, and within it is nested PD arrays on the 4-hour and 1-hourly chart, then those are high probability zones of reaction. Okay, so that's basically how I determine my bias. It's never going to be 100%, guys. It's simply just marking out what are the inefficiencies, first of all, looking for those gaps, then what are the points of liquidity, so swing highs, swing lows, relative equal lows, relative equal highs, and you're just trying to determine what is the most likely draw on price, okay? So that's how you do it from the top down. So what I can say from here, as of Monday, what are we today? Monday, the 24th of July, I can say that my bias for the week is expecting bearish prices to tap into discount zones if we fail to breach the high made on the 19th of July, okay? If we fail to breach that high by end of day on Tuesday, then I'm expecting price to draw down into these discount arrays, so expecting a bearish Wednesday, Thursday, Friday, all right? So that's how you determine bias. That's how I do it. Nice and simple. You're never going to get it 100%, but I hope this makes sense and helped you somewhat formulate how to determine bias for yourself.